people have been selling and driving price down. Then they come in and start buying. Now, what does that buying do? Well, that buying pushes the market up. It's really that simple. So when you start to see these types of spikes coming into the market, it's a very good sign that large traders, especially in the Forex market, because remember, the retail Forex, guys like you, guys like me, we are less than 3% of the market. And I think that's even pushing it. Most of the trades that go on are big institutions, large commercial buyers, and large speculative traders. That's who's driving the Forex market. Not the guy trading a regular lot or a mini lot. Those guys are not driving the Forex market at all. So when you see the market turn around, especially in a case like this where it breaks through an area, a zone of prior resistance. Remember, why is this resistance? Because if price drops below it, the theory is, if price drops below it and people sold up here, they're probably going to sell it again. What it also means is if there's no demand in this area and price starts to move back in there, why would people all of a sudden have a desire for it? I mean, do you see a mass hysteria for people to buy things like water supplies or massive generators like they did in the year 2000? Do you see on the news that women are fighting over the last Beanie Baby? No, you don't, because there's no demand. So if there's no demand, you're likely going to have a resistance point. It happens on anything that you can put a price on. You'll see it. So what that tells me is if price pushes down below resistance and then comes back above, in other words, I get a spike, that's important information to me. Why? Because demand might be coming back into the market. So what's the whole goal here? Enough of the theory and enough of the concepts. Well, the goal is obviously to make money. So we can't just look at a few bars here. We're going to have to look at a little bit more. So let's take a look at what happened here, and let's sort of tie this in together. And remember, I'm very big on planning. I'm very big on having a set objective in the marketplace and not just letting things go and letting things happen. So here's the last retracement. Now look what happened to price. Price came down exactly to the weekly 382 retracement. So, now, let me back up a little bit. If we were looking at the market, remember, if this were Friday, and we were talking about some possible areas for reversal next week, what I would be pointing out would be, hey, this 382 level, this 94.63 price, if the market can't break through there, we're probably looking at an aggressive trend run up, because trending markets only retrace about 38%. And that's when you get an aggressive trend move up. Now, it's normal for the market to come into a 50% retracement or even a 618 retracement and still move up. So it doesn't mean that the trend is over. The only time that I start getting into the bearish mindset if price breaks through 78%. Because think about it. If there was demand all the way from here to here, and price gets down into the lower end of the range, let's just think about this logically. Okay, forget about trying to make Fibonacci into this mystical experience. It's not. It's just pure logic. The market, if it gets down into this area here,